Hello, my name's Adam Kahn, and I'm the Rational Investor. Now, let me tell you why changed my name to the Rational Investor. It's because the more things I watch on YouTube and the more crazy the people on there, and I don't mean that they're crazy, but the more absurd they get about how the economy is just going to collapse and stocks are going to fall in half and housing's going to go drop in half and so on and so forth. I just figure there needs to be a few people out there that are a little bit more reasonable about what we see going on in the markets because I just don't think a 1929 type of crash is realistic. And while I see a possibility that we see some slowdowns and maybe even continued corrections in the market, the reality is the negativity and the way that the price action has been make me think we have more room to the upside than the downside. I think whether it's stocks or real estate, both look pretty attractive to me. Now, I'm going to make the disclaimer I'm not a financial planner. So please use the content on my channel for entertainment only. And you need to make your own financial decisions or reach out to your financial advisors and just read this as a guy sharing his information and his opinion, and that's about it. But that being said, my opinion is housing looks really strong. You know, I actually wrote some notes today on some things I wrote where people were talking on CNBC. Yeah, and maybe we see a small correction. And if the Fed really pushes things to an extreme level, well, of course they can make prices go down. But if they're raising rates enough, I think your monthly payment's going to go up no matter what the prices do. Whether it's because of rate increases or price increases, the demand is there. Unless we have some massive unemployment, which I think the Fed's done a phenomenal job of getting us where we needed to be quickly. And now things seem to be what I would call normal. You know, when I grew up, it wasn't like everybody was just buying this and buying that and everything. They gave some thoughts to it. And the general idea of inflation is too many people chasing too few goods. Well, that's what I see going on. Whether it's a loaf of bread or a house, there's just not enough out there, and everybody's trying to get it, and that's driving prices up. I think the Fed might be stuck in a little bit of a corner on some of it. But let me talk to you about what the Compass CEO was talking about today is how I feel as a lender, which is the buyers have gotten used to the rates in the sixes at this point. There was a bit of a shock to the system when rates went like from 3 to 6% over a really short amount of time. And then it even pushed above 7 significantly, and people were caught off guard. As it's fallen into the sixes, those who are still in the market, they seem to have accepted it and understand that's where the market is. Some of them hope that they'll see lower rates down the line, but I'll go with what Powell's saying, which is even if he doesn't raise it, he probably is able to keep it here for a longer period of time than people expect. The fact is, demand has come back into the market. And as long as the demand is there, I don't really see rates falling anytime soon. The more interesting numbers that I was listening to, which can be skewed any way somebody wants to. And forgive that I won't, I got to read my notes, but existing home sales are 22% lower year over year. And they're 4.44% versus 4.49 month over month, which is a 2% decline. Not very much in terms of volume. And the most important part that I took out of it is right now there's about a 2 month supply of inventory on the market when what is considered healthy is a 6%. So a lot of people are boo-hooing the lack of inventory is not important, but to me that's the most important statistic out there. If there's not enough inventory, it seems pretty obvious what'll happen, which is means prices will go up. If there's enough inventory or too much inventory for the demand, well, that might push prices down. But the big difference from what I see versus what went on in 2008 are twofold. One, the loans that are out there are much different. People are locked into 30-year mortgages at low rates, whereas before they had the option arm that was morphing into a principal and interest payment or an amortized one. At the same time that house prices were correcting, And the home builders were just building at an exorbitant rate and putting up tons of houses, which created a flood of inventory. Well, they learned their lesson from 2008 and totally changed the business model where they don't build to the demand coming in anymore. They only build once somebody buys the house. So if they have some fallout, the deals that you see are simply the people who put money down on a property and decided not to move forward on that. That's not a huge percentage and it's not overwhelming to the market. And part of the reason that they're able to give deals on those homes is they've already accepted an escrow money. And if there were upgrades on the property made, they've also gotten money down from the upgrades that were done. So if they're selling a $400,000 or $500,000 home and they've collected $20,000 or $30,000, that gives them a lot of room to offer an incentive to another buyer to get that property sold and off of their books. They're just not stuck the way they were. And at least here in Las Vegas, if you go around and ask, they don't have a ton of inventory and they're putting in price increases. Amazingly, as their costs of goods and to build the homes have dropped dramatically. Looking at lumber prices, I mean, lumber fell from about 1,500 a bundle down to 400 and change. That's a huge savings for these home builders, and their stocks are like crushing it. They're making new highs and doing really well, which is an indication of how they're actually doing versus the noise that you hear on YouTube. I mean, really, I see a lot of these guys going on and on touting about the interest rates and the debt and so on and so on. But watch the prices and watch the inventory, because the struggle that you're having is anybody who's in a home from a year ago or more, they're almost pinned into it because of their low interest rate. The interesting thing is the higher interest rates is causing a high demand for rents, which is helping to keep the investors in. There was 17% of homes were investor bought. Let me double check my notes. All cash was 27% and investors 17%. The investors were down from 25%, but that's still pretty big. The only caveat is the cash buyers. Even that, they're the only ones that would benefit from the prices dropping as interest rates go higher. I mean, sure, if you're paying cash and the price drops, well, that's some savings. But if you're getting a loan and the interest rates go up and the price drops, I think more people are sensitive to their monthly payment than the actual price of the home. You know, myself included. I mean, we have an exceptionally low interest rate. So if we were looking to move, which we're not partially because of that, well, odds are we'd be looking to rent our property out because it makes no sense to sell it and lose that rate. It's almost another asset like anything else. The payment is so low and compared to what's happened. I would have to lose my job and be in such dire straits to sell this property. I feel like we're stuck in it. Now, don't get me wrong. I love my home. I'm not looking to go anywhere. I got no problem being stuck in it. I bought it as the home we wanted and hope it's our forever home. But I think there are a lot of people that might have not quite bought their forever home that just aren't moving, because when they do the math, what they're looking at is downsizing their home for a higher payment. Well, myself included, that's just not something that's attractive to me. Why would I want to go buy a home that's half the size for more than what I'm paying now? It just wouldn't make any sense to me. And I know I'm not the only one in that position. So that's why I think you see a lack of inventory. And I don't think it matters if the Fed raises rates to 10 or 15%. The only way it matters is if they create such a bad unemployment situation that people have no choice. But that is not their goal. The funny thing is, now that they've been able to raise rates to where they are, I like when I screw up, so I'll leave that in there. Now they actually have some ammunition if things start to slow down. They can lower rates again, and they can do all these things that they couldn't have done when rates were pinned down to zero or close to it. So before you let somebody talk you out of buying your home, just think it through. If you have your down payment and you have a job that you feel secure about and you can afford the monthly payment well, what are you renting for and holding off? That makes no sense. And if you are, please continue to save money, put it in stocks, buy gold, buy baseball cards, buy artwork, buy whatever it is that you see as a good investment, especially if you see the inflation continuing. If you think inflation is going to continue, then assets and things will go up with it and your money will become less valuable. There seems to be a lot of disconnect on the advice out there of wait, 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 save, 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 because their real fear is the inflation's gotten out of control. Well, if the inflation has gotten out of control, things will become more expensive. Your dollars will become worth less money. So, why would you want to sit on cash waiting for things to go back to what they're saying is normal or this big crash? Because in the meantime, your dollars may become worth less and less money during that time frame. Like the total advice just doesn't make sense, and there seems to be some loss there. Anyway, please like, subscribe, give a thumbs up, start arguing with me, tout why I'm wrong. But I'm going to trust my information and I'm going to continue to save. I think that's the way to go. I don't see any value in not saving and not or just sitting in cash and watching the world go by. You got to live your life and you can't prepare for gloom and doom in 1929 type crashes, you know. Anyway, again, thumbs up, like, subscribe. Have a great afternoon, and I hope to see you guys soon.